Hi everyone, welcome to this session by Teji Mandi on the stock market outlook for 2022. So, if we take a recap of the stock markets in 2021, the Nifty was up by 28%, and the small cap index was up by 54%. The second wave, which happened in April and May, had derailed economic growth severely. However, companies showed remarkable agility in coming back. What we think is that from here on, the low-hanging fruits of stock price appreciation are sort of over. So it'll be more, stock-specific and sector-specific calls that will do well. This year the market breadth was quite strong with commodities, PSU banks, and real estate doing well. Now, if we also sort of recap back to last year's budget, it was a monumental budget because, it showcased a move of India towards a more bold and growth-oriented agenda. The government sort of increased the deficit target to 9.5%. Also, the focus was on reviving growth as compared to sort of thinking about the rating agency. So this was sort of a monumental shift. Also, this stance could sort of be bigger than the 1991 reforms, and in fact, India's macro position is far better compared to that time. So if we see the economy, various indicators are sort of showing that the economy is sort of recovering back. So if we take this red line, assuming that the pandemic had not happened, we would have been at this level. However, as you can see, the trend is above this. So what this means is that we are, above the pre-pandemic path. The government cash balance at the RBI is, at a multi-year high. So this again, is very positive as far as the, macro position of the country is concerned. There's also a lot of high frequency data that is showcasing that the economy is sort of firmly coming back on track. So if we see UPI payments, they've grown significantly. Electricity consumption is also sort of growing quite encouragingly. Number of e-way bills have been pretty encouraging. The freight traffic has been pretty encouraging. And so manufacturing PMI has also sort of bounced back. So all in all, it's indicating that the economy is on a healthy recovery track. Now, as far as Omicron is concerned, this is obviously a variant that could sort of, or that is causing some intermittent curbs. However, this situation could be very transitory, and in fact, Omicron is significantly less harmful than the other variants of COVID. And also, by March 2022, it is expected that almost 90% of Indians will have antibodies, because India's vaccination drive has been very strong, and so a lot of people already have at least a basic protection against COVID. So it is unlikely that it would cause the sort of derailment that it had caused in April, May, and June. So also, it's important to sort of see that there is a significant increase in capex from both the government and the private sector. So if we see like some of the big companies, they've sort of announced capex, some pretty ambitious targets of like Adani Green has like almost 1,40,000 crores of capex. Reliance another 75,000 crores of capex. So a lot of companies sort of making big capex announcements. Also, government capex, from both the private, from both the center and the states, was close to almost 250,000 crores from April to October. But as you can see, combined capex of the 18 largest states for 6 months of FY22 was close to 160,000 crores. So that sort of goes to show like there's a strong intent from the government as well to focus on capex and economic revival. There's also an increase in environmental clearances. So this is sort of a lead indicator for capex growth that is going to come in the next few years. Now, in terms of some updates on the capex cycle, the capacity utilization of some of the top players in the steel and cement industry remains above industry average. Government capex is focused on the road, rail, and water segment. And as that's shown, there's new project announcements by multiple sort of private sector and public sector companies. Also, engineering goods exports are up on a 2-year basis. Residential real estate, now this is again an important sort of indicator of a growing economy. So inventory levels bottomed out in both tier 1 and tier 2 cities. And there's a healthy launch pipeline which shows that residential real estate will also bounce back after almost a decade of consolidation. Also, the PLI is expected to fast track some of the Capex plans of the private sector. So as I talked about real estate inventory reducing, you can see that it's almost one of the lowest levels that we've seen in recent times. And because of that, there has been a slight increase in the prices as well of some of the new projects which are being commissioned. Also, real estate has faced a series of reforms like DMON, GST, and RERA. And housing demand is expected to be buoyant because of preference for larger homes, attractive interest rates, a lot of incentives by the government. And it's also shown, the real estate developers have entered into 45 land deals of almost 1,700 acres, of which 70% is dedicated for residential real estate. Another important indicator of growth is credit growth. So credit growth was almost 5% in April, and this has increased to about 7% in November. Also, RBI's latest sectoral deployment data, it shows that there's a pickup in corporate credit. It was at 0%, and now that's close to about 4%. Usually credit growth in India on a steady state basis in a growing economy has been at about 15 to 20%. So, once we see that sort of a number coming in, that would sort of show the economic upheaval. So this chart is very useful to sort of see where we are in the cycle. As you can see, we are just coming out of a down cycle and going into a cycle of economic recovery. And this is very important because this shows that once you sort of come from a down cycle, the up cycle can last for very many years. Now, so the question is, are we on the cusp of a long growth cycle? And we think that the answer is yes. India's corporate profits to GDP are at the lowest in several decades. There's a clear focus on Capex, infra, and roads that could re-rate stocks and sectors. Good thing is we're starting a cycle with low interest rates, low debt levels, and surplus liquidity. And in a up cycle, a 5 to 10% top line growth can lead to 25 to 30% earnings growth for companies. So Nifty EPS, if we see from FY12 to FY19 was at about 4%. The base is taken to FY19 because FY20 obviously was a pandemic-driven year towards the end. So that's why we've taken 19 as the base. But so 19 to 24 is expected to be at 15%, and from 4% it's a jump to 15%. That's a meaningful shift in corporate earnings growth. And financials are likely to be an important component of this growth. So as we've seen, from 2015, whenever there has been a sharp correction in the markets, there's also been, an equal pullback. And as you can see, even this time around, the situation is no different. So I think, you should use corrections as a time to, top up your investment or enter into the market, because earnings and the economy are sort of going up, and when the market corrects, in fact, it's a good time for you to sort of enter and sort of double down on your investments. And one last thought is that time in the market is sort of more important than timing the market, because historical studies across the world have shown that the more time you spend in the markets, the more likely you are to sort of generate long-term wealth. If you just take the example of the Nifty, it's in the last 30 years, it's given a return of about 30x. And if you miss the 30 out of the 30 days of, out of these sort of 30 years, your returns would come down from 30x to just 3x. So, important point is big money is made by being in the market. So in summary, we think the economy is going to a structural upcycle after almost 15 years. GDP is expected to grow strongly in the next 4 to 5 years. Corporate earnings, which grew in the last 7 years at about 4%, are expected to grow by 15% in the next 5 years. Government plus private sector Capex is expected to be strong over the next 5 years. And they're starting, an upcycle with low interest rates, low debt levels, and surplus liquidity. So now, to talk to you a little bit about the Teji Mandi portfolios. We are a SEBI registered RIA, and we're a subsidiary of the Motilal Oswal Group. We simplify stock investing by providing an all-weather portfolio based on a risk profile. We for a subscription, you basically get regular rebalance updates that you can sort of transact using your existing broking account. We have two parts to our investing philosophy. One is the stock picking, and one is the rebalancing. And now in stock picking, we sort of track data from across 30 different sectors and subsectors. We do detailed balance sheet, income statement analysis. We use quantitative screens across accounting, growth, and valuation parameters. We also track real-time news trackers and of companies' earnings and other market participants. So in tactical bets, this is about 20% of the portfolio. We have a time horizon of 3 to 6 months. And there are various criteria, but the idea is that, for example, when there's a change in government policy, which, like, for example, government ban on electronics products from China benefited a lot of companies in the Indian electronics sector. Last year rainfall was above average, so companies in the agrochem and sort of tractor space did very well. Some long-term winners. So these are companies that are from the perspective of 12 to 18 months. They should have had a good growth track record of over 1, 3, and 5 years. Meaningful growth runway should be visible for these companies going forward, and they should have prudent capital allocation. Now in rebalancing, this is the part where we either choose to exit a stock and enter a new one. So, it could be because the investment thesis is no longer valid because companies' capital allocation policy may have changed. There may be a change in the industry dynamics. There could be a major management overhaul. It could also be that there's a substantially better risk reward available in another stock or another sector. Now, just to give you some case studies of companies that we've sort of recently exited. So one was CDSL. So, this is sort of a duopoly industry where CDSL sort of has an asset-light model with annuity-based revenue streams, and because of the buoyancy in capital markets, CDS's cash flow and growth was quite strong. So we got a gain of over 70% in this stock. Now Tata Power, is a subsidiary of the Tata Group and is one of the largest sort of transmission and distribution companies in India for power, and they're focusing specifically on alternate energy like electric vehicles and solar energy. And because of that, the stock has seen a handsome sort of price appreciation, and we also gained over 85% in this company. And as you can see, because of our ability to pick stocks and rebalance in a disciplined way, we've sort of done very well since our inception in March of 2020. And yeah, so what do you get when you pay for Teji Mandi? You get access to an actively managed portfolio. You get regular rebalance updates. You get rationale behind all the stocks entry and exit. It's a simple one-click buy and sell rebalance facility, and it's an easy to understand sort of stock market education. How much do we charge? We have a flat fee model, so it's $149 per month if you take the 6-month plan, and it's $199 per month if you take the 3-month plan. We do not charge you as per your investment amount. You can invest as much as you want. Now, just some product updates. We've integrated ICICI Direct as one of the partner brokers. We also have a really attractive referral program. So if you refer your friends, you get them to subscribe. You get 400 rupees as cashback, and even your friend gets 400 rupees as cashback. So there's no limit to how much you can refer and earn. So please use, and also for a lot of first-time users, please use Teji Mandi 150 while subscribing, and you get an instant cashback of 150 rupees. We are also excited to launch our multiplier portfolio, which is a mid-cap, small-cap portfolio, and that's also going to be coming soon on the app. This is currently only available on the small case platform. So great, thank you so much. And now we'll start the Q&A session. And just a second. So now, just to sort of look at some of the questions that we've got. So first question is, is it a good strategy to wait for, the market to sort of retrace to invest lump sum, or, I've been holding this portfolio since 1 month. So I would suggest that if you have capital, you should sort of keep deploying it over time. You should, well, markets can correct. So markets have corrected recently. So you should maybe consider topping up your investment. And you can also consider doing an SIP. We also have that option. How and when does the reshuffle of stock should be done in Teji Mandi app? So I think this is something that we'll give you the advice, and you should maybe consider, executing it, because this is something that our team does actively. And I explained the rationale for it earlier in the presentation. So when you rebalance, when you rebalance in a disciplined way, it ensures that your portfolio is sort of, up to date with the latest model portfolio. How to invest in bear market and when to rightly judge when to invest money. So I think, as I showed you, big money is made by being in the market, not by being outside the market. So biggest money is made in the bear market by investing or entering during the bear market, because that gives you a great, entry opportunity. So as I explained, when the earnings and economy is going up and the markets are going down, that gives you a great sort of entry point. So that's how I would sort of suggest you to approach that. Impact on market of current scenario, increase in interest rates. So I think I touched upon this earlier. If the current Omicron situation should sort of be a transitory one. So far, what we're seeing is that the clinical studies are showing that the effects of this are mild. And significant chunk of India has already sort of developed antibodies through vaccinations. And by March, it is expected 90% of India should have antibodies. So looks like it's a transitory situation, and it won't really sort of derail the economic growth. Is your flagship product on Teji Mandi app same as on Small Case? Yes, it is. Should I keep my SIP on in such a volatile market? Yes, you should. Teji Mandi में अगले 6 महीने में can we get 30% growth? See, this is not a question that I can answer. I mean, we have our past track record that you can see, and we continue to follow our sort of, portfolio process, and sort of what outcome happens, would be dependent on how the market sort of do in that much time. Teji Mandi mein, can I start a 10 lakh ka portfolio? Yes, you absolutely can. There is no limit to how much you can invest in any of these portfolios. So, please don't sort of keep that as a barrier. Then, what is the reason behind FIs continuously selling? So, this was more a result of the emerging market sell-off, which happened because of the Fed tapering. And India has been one of the, victims of that. But, India is one of the few large countries that has, a huge runway for economic growth ahead. We are, in fact, every global strategist is sort of talking about India's potential. And so, at some point, if, just like a lot of global investors made a lot of money in China, in the next 10, 15 years, India is going to be a relevant economy. So at some point, FIIs are definitely going to come back. What percentage of the total investment amount should be kept in fund balance? So I would suggest maybe close to 5 or 6%, right? Because that's the amount that we usually sort of rebalance at one time. When are you planning to bring multiplier product on Teji Mandi app? I think we're just going to bring it out soon. We're currently working on it. Which sectors are expected to grow in 22? I think, as I covered, I think banking is one sector that is likely to do well. Real estate is a sector that is sort of coming out of a deep consolidation of 10 years. So that should also sort of do well. And will I get personal assistance on creating an investment profile worth 5 lakhs and above? So, our team can sort of guide you in terms of onboarding you, but, this is a DIY sort of a portfolio. So, you don't have to do anything. I mean, it's like sort of very simple steps. You can log in through your broker, and, and we'll tell you how much you should invest in what, and it's all sort of automated. So it should be relatively straightforward for you to execute it. But, we are here more than happy to sort of answer any questions. So you can reach out to us at support@tejimandi.com. Great. Thank you so much for attending this webinar. I was really excited to sort of, meet all you guys and sort of answer your questions. And please feel free to reach out to us. And please make use of the referral code and the promo code that we're offering so that you can be associated with the Teji Mandi app. Thank you.